Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Tuesday, the 27th of August, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. Welcome back to me. Been on the road, had some downtime, enjoyed my break, but back in the saddle now. So welcome, everyone. I know I left you in good hands with Duncan. I've watched some of the webinars he did. So all good on that front. Seems like you guys were well looked after. Duncan will continue working with us, covering some webinars during the week, maybe 1-2 webinars a week. So he's going to continue that going forward. So you'll continue to hear his voice. Please send any feedback. Actually, generally, I've been thinking about this. If you could send feedback, send it direct to me, probably best. Steve at TradeDay, steve@tradeday.com. Not only on Duncan, just generally on the webinar. So if you want to just put a few lines on anything you want to see more of on the webinars, what you want to see less of, would you prefer them to be a bit longer, a bit shorter? If there's certain categories or areas, whether it's on the fundamental or the technical side, maybe covering a little bit on the psychological side, we could do. But the webinars are supposed to be like an update on the news. So I don't want it to become a teaching forum, really. That's not what it's there for. But any kind of feedback on any of that, the structure of the webinars, the length of the webinars, what you want to see more of, what you want to see less of, what you like, what you don't like, and feedback on myself, on Duncan, on the delivery, all of that, please. If you can put it in a webinar, in an email, title it webinar to Steve at tradeday.com, entitled it webinar. I'm putting it into the chat now. That would be well received. Send me an email. So cool. Right, let's get on with the order of the day. Not too much to talk about. It was a fairly quiet day yesterday in the markets, more of a consolidation day. Probably not a big surprise. We've got two pieces of significant data, one very significant piece later this week, which I'm sure I know Duncan covered yesterday, but we'll go through those again. And then we've also, got the Nvidia earnings coming on Wednesday. So that's a huge event for the market these days, labeled by Goldman Sachs the most important stock in the world right now. So, we're going to be definitely focused on that. We'll talk about a little bit about that as we go through the webinar. So first of all, we got today, we had some notable GDP data, actually, consumer confidence numbers in here from Germany, and also GDP numbers in here, slightly better than expected on the GDP. Was a risk of a year-on-year numbers being seeing a slight contraction. It actually comes in at 0 in here for Germany in here this morning. So slight positive on the GDP data. Not that backward looking either in here. It's Q2 data, so not too backward looking in here, fairly backward looking, but not too backward looking. So we had that data today already. Looking forward to ahead to today, the notable piece of data, which is the first notable piece of data we get this week, is the consumer confidence data. This does have an impact on markets. So watching out for that. We get that at 10 o'clock today, Eastern time. 10 o'clock Eastern, the CB consumer confidence data for the US. So that's certainly going to be one we're going to be watching today. The other notable piece of data, as I'm sure has been covered, is going to be on Friday, where we have the PCE. Remember, on Thursday we get the GDP and PCE data, but it's not the important piece of PCE data. So we get the PCE data in here, but the GDP data on Friday. But then on Thursday, and then on Friday we get the month-on-month and year-on-year PCE data. Here it is here. Remember, that's the Fed's preferred measure of inflation, the prices index part of that. So that's going to be important to watch for Friday. But today we get the consumer confidence data in here, and we're certainly going to be keeping our eyes on that at 10 o'clock Eastern time for today. Consumer confidence from the US, there it is there. So we'll be watching that. Whilst we're talking about the upcoming data, Nvidia is going to be the all-star performer, hopefully, if you're a bull, going into this week. It's not till after the close tomorrow, after the close on Wednesday. So we're waiting, until then, and that could really kickstart this and continue the rally, a rebound rally that we're seeing in here throughout much of August, or not, or it could see a significant reversal. So we're certainly keeping our eyes open for Nvidia on Wednesday. Just one other thing while we're going through calendars, I thought I'd mention in here, we're starting to tick down to the next Fed meeting. The next Fed meeting, I know we're not in September yet, but it's on the 17th and 18th. And what I wanted to bring attention to, I've shared this with you guys before, the Fed calendar in here, the blackout calendar, just putting the link into the chat now. Fed blackout calendar, you just Google Fed blackout calendar, you'll get to this in here. So the meeting's not till the 17th, 18th of September, so we get the result on the 18th. But remember, it's a week and a half before the blackout period. So it starts on Saturday the 7th. So the last information we're going to get from the Fed is Friday the 6th. So we can basically get the rest of this week, okay? We have the rest of this week and then next week, and that's all we have from the Fed. So we're certainly keeping an eye on those Fed speakers in light of the PCE data we have coming up on Friday, in light of the Fed minutes that we had last week, which show that dovish shift, in light of Powell's tone at Jackson Hole last week, which again was fairly dovish in here. So all of those things combined, we're seeing a dovish shift. I'll come to the CME Fed Watch tool shortly and talk through that. But we're seeing this dovish shift in here from the Fed over the past week or so. And so we're looking for that to be reinforced by Fed speakers as we go into the blackout period. So we've got the balance of this week and next week. Turning to 5 things to start your day, to run through some of the fundamentals. Nothing too interesting to report really from the stock index side. Markets were fairly closed yesterday, highlighting here we're waiting on the Nvidia earnings and the US inflation data, which I've already mentioned in here. We do have markets ticking slightly higher overnight in here, Asian, European, and the futures markets in the US ticking slightly higher in here. We'll come to cover that in a bit going forward. Oil is sliding actually. Oil lower in here, and the outlook for next year getting more negative in here. Goldman Sachs, Morgan Stanley have lowered their price forecast as global supply increase, including potentially from OPEC plus. Remember, this is in light of the fact that we've had tensions rising in the Middle East. So tensions rising in the Middle East normally would see potential for the oil price to go higher because of contraction of supply, but we're not getting that. We're getting the opposite of that. And remember, a lower oil price often seen as a positive overall for stocks and for markets and for the global economy because it's effectively higher oil prices like a tax on the economy, right? It sucks resources out of the economy. So a lower oil price potentially, if it is through excess supply. Now, from lower demand is not good because it's showing a lack of demand, but from excess supply means a lower oil price actually facilitates potential growth in the global economy. So that's seen as a positive. China is continued to have concerns though. The health of global markets and the health of the Chinese market in here, with Temu owner PDD holding surprise investors with an unusually gloomy outlook, and we'll focus a little bit on that. A couple of articles on that. The rest of this stuff not particularly exciting for us. Paramount deal and office values in US central business is plunged in here from 52% from their highs, not really significantly impacting on what we're looking at on the major stock indices. So just covering some of those, just running back through these in here. Stocks weighed in fin trading before Nvidia reports, and also those inflation reports. Options pricing large post-earnings swing for Nvidia and the Nasdaq. So the options market's pricing in a significant move. I mentioned that, Nvidia is the most important stock in the world right now. It really has a significant impact on the Nasdaq. It has a significant impact on the S&P and the broader US equity indices, and thereby all of the major global indices in here. So, and the options markets are pricing in a significant move, either higher or lower. So both puts and calls, significant activity in those. So we're going to get a move probably post Nvidia, so Wednesday evenings and into Thursday, Friday. So we're going to be certainly watching that. But markets are kind of a little bit on hold and expecting more of a consolidation range feel to activity going into today as well. But we do have that consumer confidence data, so we're keeping an eye on that. Morning bid in here from Reuters, similar to 5 things to start your day. Pre-Nvidia hesitation obscures the record high. So the wider markets, the S&P particularly, is just short of its record high in here. But at the moment, markets on pause ahead of that those Nvidia numbers, and then also the PCE data on Friday. Futures inch up higher with eye on interest rates. Nvidia results. I'll talk about interest rates and the yields in here shortly. FTSE 100 live. Pound hits strongest since March 2020 as rally gathers pace. FTSE 100 advances for a fourth day. So UK stocks doing well in here. Miners lifting European shares. Copper prices surging. Nvidia results in focus. PDD, so this is 55 billion stock crash, sends warning on China economy, so that's of a concern. And another article also on that from Reuters. But the overall Asian markets overnight are slightly better, just under 0.5% higher for both the Nikkei and the Hang Seng. Turning to Europe, similarly positive in here. The French CAC, little change, but the German DAX up nearly 0.25%, and the UK FTSE up about 1/3% in here this morning. The UK FTSE was closed yesterday. We had a UK holiday yesterday. And if you look on the overnights in here, slightly higher, slightly higher in here for the NASDAQ, up just over the 0.2, with the S&P and Dow Jones only slightly better in here on the futures markets on the overnight. Let's turn to interest rates now, and you can see in here, first of all, on the CME Fed Watch tool, looking into the September meeting now, the market's completely priced in. Remember, the current target rate is 525 to 550. The market is completely pricing in here in this column, the 500 to 525 column. So that's 25 basis points of rate cuts, but there's a 28% chance that we go big on the first one, go with a 50 basis point cut in here for the first one. If you move out to November, what you'll see in here is then there's a 50% chance that we're down by 50 basis points. But a 50% chance in here that we're down by more than 50 basis points. So either 225 cuts by November is priced in, or a 50 and then nothing. But there's also a 50% chance that we're down by 75 basis points come November. So maybe a 50 and a 25. And even an outside chance, 8.5% chance in here that we're down by a full percentage point come just November. And then by the end of the year, the market now pricing in. So this is 450 to 475, the right column in here, the furthest right column. 31% chance that we're down by 75 basis points, that is, by the end of the year. But then a much bigger chance we're down by more than that. So we've got that. So that's 30%. So we've got a 70% chance we're down by a whole percentage point by the end of the year. 70% chance we're down by a percentage point or more by the end of the year is what the market's pricing in. If we go to the yield chart, you see the yield chart that has been wavering in here. Since we had that significant lower yield move in here at the very end of July and early August, the market has been wavering in here. So yields kind of sideways. This is the US 10-year. And what we're really looking for is the next significant move. So maybe watching for the Fed speakers in here. Is the yield move going to be to even lower yields or to backing up to higher yields? Looking at that PCE data, probably the driver on that. Nvidia shouldn't really impact this too much. More looking at potentially today's consumer confidence, but more likely the PCE data on Friday to give us the next spurt of whether we're going to confirm a more dovish Fed or whether we're going to look for maybe a not as dovish Fed, because the market is at now, going back to the Fed Watch 20, the market's pricing in a very dovish Fed now from everything that was said last week by Powell, and also from the Fed minutes from last week, and also from the data showing, remember that employment data last week, the revisions, the annual revisions, showing that employment situation is much more negative than we previously thought. So maybe the Fed going to react on that more in a more dovish way. In here on our Treasury technical analysis from market chart is in here. We stay bullish in most places, apart from the short end. Actually, the short end is shaping up more negative. So remember, the short end reflecting the Fed central bank. The long end staying more bullish. That's reflecting the economy. So the long end staying bullish because they're looking for a positive economy and also a more dovish central bank. But the short end in here slightly more negative. I think. So again, watching the short end in here for a potential breakout that could come post PCE data on Friday, telling us whether we're going to see a more dovish or a less dovish central bank from the Fed going into ahead of the September meeting. On the stock side, yes, we've had a dip back lower on stocks in here, a slight easing back lower. More notably on the Nasdaq, which looks like it's potentially tracing out a slight topping pattern in here. But overall, the underlying bullish bias remains very much intact. Just a very quick nod to gold and oil. Gold stays very strong. Remember, the dollar's weak because of this more dovish tone from the Fed. Lower interest rates in the US means a relatively weaker dollar. The dollar's been weakening. The multi-year lows on the dollar index, and if we take a look at then what that means for gold, a weak dollar. Remember, the gold tends to move in the opposite way to the dollar because it's quoted in dollars. So the dollar weakness is allowing gold to push back up towards the all-time highs. And oil in here, despite the spike back, raising the spike back higher, we're flipping to bullish in here on the short-term outlook for oil because of the short-term concerns. But as we said before, the bigger picture outlook on oil remains negative, but short-term outlook in here bullish for oil. A quick nod then to the charts, and then I'll wrap us up in here. So this is the US 10-year future. Again, similar to the chart we had on the yield, the inverse version of the yield chart. The underlying theme remaining bullish in here, but we're looking for a potential breakout of this we've got this kind of triangle pattern building in here. So underlying factor is bullish, but waiting for a breakout. The market very much in consolidation, probably likely to stay in consolidation until we get through the PCE data, probably the next significant move of that. Nasdaq in here does look a little bit wobbly after yesterday's negative price action in here. We've got a succession of lower lows and lower highs. We're going to see that on the 30-minute chart in here. So there are a little bit of a concern in here. So lower lows and lower highs here, lower lows here. But the market rebounding in here this morning. So potential for a rebound, I think, still going into today, back into the range. Looking for this to move back into this range we've had in here for the last few sessions. Ahead of the Nvidia numbers, and obviously Nvidia is going to be critical for the Nasdaq. S&P is more resilient. We did get the slight setback yesterday, but more at the upper end of the range. So the S&P, the broader market, looking more positive. And if we look at the 15-minute chart in here, seems to be building a base in here. We've got actually higher lows in here building in here. And really, if we take out that peak there is going to be critical on the top side in here in the short term, maybe through the consumer confidence data. On the top side, 46.5. We can get up through there, then S&P looks a lot more positive and probably going to pull the Nasdaq back up with it. So underlying themes in here, positive, but in consolidation likely today ahead of the Nvidia numbers, but watching out for that consumer confidence number at 10 o'clock today. I'm going to leave it there. I'm going to wrap up. Wish you all a great trading day. Take care. Stay safe. I'll be back with you with another bull versus bear webinar tomorrow, Wednesday.